So a lot of you guys said that I should keep posting these weekly reflections where I will just go over every trade that I took this week. The reason why I stopped doing this for like 2 or 3 weeks is, first of all, just because it took up too much of my time. I think I'm just gonna keep them more concise right now. Also due to the fact that I just take way less trades, so that's gonna make the videos also a little bit shorter, but there's gonna be so much gems in here. That's why the second reason why I didn't post these for a few weeks is because I'm in Dave's mentorship, as some of you guys know, and this guy just transformed my whole trading, and all of these things are clicking inside my head, and it just makes all so much sense right now, and the market is so much easier to read after I met this guy and I learned this concept. So that's also a reason. I'm not sure if I can share all of this, but I will until I need to sign like an NDA. Until that day happens, I'm just gonna keep posting my weekly reflections publicly on YouTube, and yeah, I think we can both learn so much from them. So without so much talking, let's just get right into it. So these are the trades I took this week. As you can see, I'm going to so much less trades. I only took 10 trades this week, which is like so much less than I used to trade, and it's actually just 5 good trades, and 5 are just like some random over trades. So I actually took about 5 good trades this week, and it was a profitable week. Not until Friday. Yesterday was the day that I had a really good trade and made me profitable in the week. So that's my 3rd week of profitability. And yeah, let's just keep it going. Let's talk about each day. On Monday, I started with a little loss, which is a $100 loss, which I'm completely fine with. Let me see. On Monday, the reasoning behind this setup is we had an SMT on the lows right here, but then it got canceled because of this internal SMT here, which is like the same amount of range, right? This is like the kind of same importance as this one. So we can delete this one because this one happens. Now this holds also more importance because it happens inside a higher time frame PDRA, right? It's inside a fair value gap. We sweep this high. What do we have after that? If we go on to the 1 minute time frame, which is usually my execution time frame, we have a micro cycle SMT, right? You see here MSMT. That means that it's an sequential SMT which happens between 2 microcycles, between 1/4 of a microcycle and the other one, and that basically confirms this higher time frame SMT. After that, we want to see displacement, of course. Now the reason why I took a long right here is because I saw this 90-minute SMT, right? So between 2/4 of the 90-minute cycles there was an SMT here, and notice I only look at the bodies. Like the bodies is so much important to me right now. Yes, it's nice to see SMT while taking out the high, but I will also count the SMT if it's only with the bodies. So let's say I'm just drawing out bodies, right? I'm just drawing out the closes. If this is SMT, right? This is SMT. Why? Not because of the wicks right now. I'm not looking at the wicks. This is not just a wick that's wicking above it. It's a body that closed above this body close in 2 consecutive quarters. The same thing right here. Yes, it's nice to see a wick. It's nice to see a wick, but I'm just focusing on the bodies. I want to see like a closure, like a nice candle closing above. So that's what I'm looking at right now. It makes much more sense. I think the algorithm is just fully based off candle closures and is not really taking into account the wicks. Wicks is just manipulation, and just the bodies show the narrative, right? That's what ICT says. They also confirms that. So I'm focusing on that. So I took a long, no reason why. Maybe just because I saw this 90-minute SMT and this micro SMT, but this should not hold because we have this way bigger, higher SMT with this confirmation SMT inside of this fair value gap, inside equilibrium of this whole range. If you take out the premium and discount, you see this has much more concepts to go down also because the drawn liquidity is clearly way low, right? We have all of these lows which can get taken out in this market maker sell model, which it eventually did, right? So I took this loss right here. That's what cost me $100. No reason why, actually. I just wanted price to go higher. Bad entry. I didn't enter after any manipulation, and I should always enter after some kind of manipulation. The only way I could maybe trade at this is after I saw this SMT and then this confirmation SMT. I could just enter here after this body close, and then I should take out everything at these premium PDRAs, because I should know that this is stronger one and we should respect the bearish order flow still here and then go down. So bad trade, costed me a loss, but the loss I could afford. And then after I saw that we actually had some kind of 3-dive pattern right here. I'm not a pattern trader. I just like to see like some double sweeps. I think it's a nice confirmation, especially inside of a PDRA. So we just fail to always break above here strongly. We always sweep a high, and that indicates, especially after all of this context, that we're gonna hold this fair value gap, and that we're going down. So after I saw this last sweep, this is basically like a last manipulation inside of this PDRA, inside of this fair value gap, and then we go down, and I can just enter right here. This is a trade I should have taken, right? I did not take this, but I'm always like drawing out what's the best trade of the day, and then I can look at it and say, okay, next time I see this, I'm gonna trade this, right? So I just take the standard deviation from the last manipulation high to the swing low, and then I will take out everything at the 4, because that's a great 4.54R. Of course, this is the final target, but like 4 hours is good enough, right? So main thing here is also just look at the true opens. Where does the big moves happen? It's always above the true session open if you want to look for short. So really nice day. No, not a nice day, but a nice day. I mean, it's a nice day. I lost, but it's a nice day because I learned a lot here. That's the most important thing, right? So that was Monday. If you go look at Tuesday, let me delete all of this. Let's see what Tuesday does. So the context, as I said, is super, super important. Context for me is how does the market move? It moves from equilibrium to stops to fair value gaps, and that context is really, really important, because actually, if you go and look on the 4-hour time frame, we are just in a bearish context, right? Especially after this big hour for fair value gap, and it just looks like a quarterly shift, right? It looks like this indice market, the stock market is at the top right now for this season, and we're just gonna drop for the rest of the 3 months, right? I think these lows are next. So the whole week actually was just a down week. On Tuesday, let's see what happens. On Tuesday, I ended up losing. No, on Tuesday I ended up winning a trade, a nice 2.64R. I'm only risking like $100 on these, by the way, if you wanna know. But this was a trade basically. Again, here I'm just using my bias based on SMT. SMT is everything you need. So we had the daily SMT right here. We have a 90-minute plus a microcycle SMT here. Again, here 90-minute here. This one, why should it not hold much importance? Because we still have a higher time frame. We have a daily here and a 90-minute here. The daily will hold more importance. That's why this 90-minute will just retrace price, rebalance price to OTE to fill this fair value gap, and then we can continue to have a bullish bias for the day, right? Which eventually happens. So I took a nice trade right here after I saw daily SMT. Not really important to always also count in this one. We use this SMT to just rebalance. So I'm just using daily 90, nice. So this 90 is basically the confirmation SMT. We always need 2 SMTs. So let's go on the 1 minute time frame and see what happens then. So this was just maybe some nice manipulations, which you can trade here. I didn't take this trade, but this could have also been a trade after this micro cycle SMT, and then this stop rate in this fair value gap could have entered here, take out at this high, but I didn't take this because this was, when was this? I just didn't feel like taking the trade. Don't remember why, but this is a trade I took. We had the daily SMT with a 90-minute SMT, really clean one inside of this OTE range, right? So really nice. And then I always like to play market maker models, right? This is for me, if I'm looking for bullish setups, I'm looking for market maker buy models on whatever time frame is presented at. So here I just see this as the final target, as a market maker buy model target. So I should take off everything here, right? So I entered after I saw a manipulation inside of a accumulation, right? So that's usually like the best setup of ICT. He really likes to play like the the reaccumulation of the market maker buy model or the redistribution of the market maker sell model. Now, this is not really a reaccumulation. This is really the first stage. I would say this is the reaccumulation, but I just ended up taking this trade because it's also really, really clean. We just sweep a low here inside of this fair value gap after all of this context has already been established. And then we have a displacement. I just enter here because I know, okay, it's just, this is a good setup. I'm going to take this, right? It's also below the true session open, which is where you will want to be looking for long setups, right? So really, really nice. Only bad thing about this, I could have banked maybe $500 here, but I only made $200 because I was too greedy and I didn't take everything off at this target. And you may be wondering why. Because I was just focusing on this fair value gap here on the higher time frame to get filled. I mean, this is a nice target, but I was like, oh my god, we're just gonna retrace back to equilibrium to this fair value gap. But this should not be how I should take profits. This is purely based off intuition. So I just based my profit taking on intuition, and that should never be the case. The profit taking should always be at highs, at lows of a market maker buy or sell model, just at highs and lows, right? And this is a clean 2.64 hour trade, which is everything you need, right? Why would I be greedy for more? Take the loss, stop for the day, good day. Let's just keep it like that, right? So nice trade, just not good at profit taking. Now, Wednesday, let me take a look. Wednesday was, let me see, it was a good day or a bad day? Yeah, Wednesday was a bad day. Let me check at my journal. Yeah, it was a bad day. I lost about $500, which is okay. I'm okay to lose that. Usually I would just spiral and breach the whole account then, but I kept it cool. 2 trades again here, which is what I want to keep it at. Just 2, 3, 4 trades a day is max. But yeah, I was just reading the market completely wrong on this day. I should have just kept my bearish bias for this whole week, right? Just stick with that higher time frame narrative. And the reason why I took longs right here, because I didn't saw this weekly SMT. And now this is another gem that I should actually not talk about, but I'm going to do anyways, is you can actually have SMT between different kind of markets. So this is just the indice market, right? I'm just always trading NQ. That's my favorite pair. I'm not trading Forex at the moment, and also not ES or the Dow Jones, nothing, just NQ. But you can look at the Forex market and basically check for SMTs there if there's no SMT present here. So you can use that bias in the Forex market to play setups in the indice market, because yeah, that's just how the market moves based on SMTs. And if you don't see anything here, you can grab information from the Forex market, because the Forex market should move symmetrical to the indice market, right? If the dollar goes up, the indices market goes down, stock market goes down, Forex market goes down. That's basically the correlation, right? So if you see cracks in correlation, like this weekly SMT I saw between Euro, DXY, and GBP USD, I can use that. And because I didn't see this, right, I write down right here, didn't see this, it's called intermarket SMT with Forex. That's because I still, that's why I still had this bullish bias, because there was like a weekly SMT somewhere right here. But if I saw this, then I would have known that this was canceled and I should only be looking at shorts, which was the move for that day, right? So whenever I'm wrong, I just didn't read the market good enough. So I missed this Forex SMT, so I just was looking for longs after some other activation SMTs. If you go and look on the 1 minute time frame, you can see that yeah, I took some longs right here. Don't know why, maybe just because I saw a rejection block getting respected right here. I saw a microcycle SMT, but yeah, that pushed us a little bit higher. But because of that higher time frame SMT, we should use this bearish bias still and know that this is going to be the next target, because this is basically going to be like a higher time frame sell model, right? So yeah, that was basically Wednesday. Took some 2 losses of like 250 each, which is alright, right? It's not bad. But yeah, I just completely read the market wrong. And you see, always happens. Where is the best setup? It's above the true session open, above the true day open, after you are bearish, right? So we have this weekly. I would have not done anything if I just saw this weekly, right? Where should I enter? But after you see this micro, this basically confirms this weekly, and then I can like look for trades right here. I don't know if I would have had an entry right here. I would maybe see this as then displacement, and then would enter maybe on this fair value gap right here, which would have been the entry. Put your stop here. But yeah, this is just in hindsight, but this is how I would play it if I see it like this right now. So yeah, that's the trade I missed. It's always around equities open 9:30 a.m. EST. And yeah, I missed this, but it happens, right? Didn't blow the account. I would have just blown the account the other day if I just lost. I'm so bad at losing, but I'm getting better at it. So that was Wednesday. Let me take a look if I wrote something interesting. I think I write some valuable stuff here, right? So yeah, I didn't notice the intermarket SMT. I didn't check the order flow. Yeah, I'm glad I followed the rules though. So this is just a big part of it also, right? If I'm gonna delete the drawings, look at the 15-minute time frame. Here. Look at this 50-minute candle. Look at this bearish close, really strong minute 15 candle. Do you really think that we're gonna go and hold this and then go up? No, this is just looking at the basic order flow. What did we do? We swept the high right here. We have intermarket SMT right here. We are just really bearish on the higher time frame. So why would I look for longs right here? No reason, right? Especially after this intermarket SMT right here. So yeah, and also the reason why it was also an amazing setup. Look at this new week opening gap also a really nice PDRA. It's basically the only thing I use. It's just gaps. It's just new week opening gaps, new day opening gaps, wicks, because wicks are also gaps, and fair value gaps, just imbalances. I don't use order blocks anymore. Stop using them. It just doesn't make sense in my opinion. Fair value gaps is what price rebalances to, and in my opinion, nothing else. So that was Wednesday. If you go and take a look on Thursday, this was a really good trading day. I didn't take, let me see, did I take a trade there? Yeah, it was a really good trading day, but then you might ask, why did you lose them? Well, because I recognized what I did wrong, and I just basically see how I could have profited this day, even though I was not profiting from it. But this was the day basically. I ended up losing a little bit because of stupid decisions and not reading the market good enough. So if you take a look here, you might see this as like a complicated thing, but it's really not. I basically just trade based on order flow and just basic ICT concepts, and SMTs is the most important thing. So we have this weekly, so this is not present at the moment before the day starts. So let's just delete this one for a bit. Yeah. So what happens is, let me take a look. Yeah. What happened is that, okay, we are here in pre-market. Okay, what's happening? This is the only SMT we have, daily 90-minute micro. So what happens? Okay, we pull down, we take out this low. SMT again. You just use SMTs. So nice. Then what happens after that? After we take out this low, we have weekly SMT and daily SMT and 90-minute SMT. So I'm comparing the Dow with ES and NQ constantly, right? I'm looking at the body closes. Does it close below? And the other one does not close below with the body between the specific quarters, right? So daily quarters is between the sessions, weekly is between the days. And yeah, these were 3 SMTs, and it ended up pushing us higher. And then after that, what do we have? Another weekly SMT, because the Dow, it just literally went like this. Let me take a look. Where is the... Yeah, like this. The Dow literally, instead of doing this on NQ, the Dow went like all the way to this high, took out this one. So it made a weekly SMT, which meant that this one got invalidated. So now we also got the daily SMT while forming that weekly. And then we are above that true day open. We are above the true session open. We are above the high impact news of that day, which was, if you go and take a look, it was upper house elections. I don't really know what that is, but it's high impact news either way. So we can use that opening of the high impact news as like a true open. And you see that happening right here, right? So after this weekly SMT, daily SMT, overall bearish context, I'm just focusing on shorts. And I basically missed this setup. But yeah, either way, it's nice to reanalyze the market. And yeah, after you see this daily SMT, you need a 50-minute displacement really. So how you could have entered this. I don't like would have, could have, but like I'm just gonna say it anyways, is after I saw this minute 15 getting disrespected, I think this just indicated bearish order flow. Would maybe enter right here, put your stop right here, and yeah, you can ride it all the way to the lows. Not good RR, so maybe would not have taken it, but maybe if you want to catch lower and target these lows always to the left. But yeah, I missed this, and basically after that I helped on the afternoon session, and I was like, oh my god, I missed this, and I was not feeling great, so I wanted to force trades because I missed this trade. So yeah, that's basically that, and I was just focusing on this 90-minute bullish, but then it got cancelled by this 90-minute bearish, and then we have confirmation on the 90-minute bearish. If you take a look at this, right, so we had a 90-minute right here, sorry, with the 90-minute right here, which cancelled this one. I can delete this one because we have this 90-minute, and then it got confirmed with this microcycle. And then yeah, I'm not sure why I took this weird long, maybe just because I thought, oh, we're just gonna rebalance to equilibrium, but there was no SMTs. We are literally just daily SMT, weekly SMT, so why would I long after all these bearish confluences? It doesn't make sense. It's so low probable. I didn't enter after any manipulation. I was just literally just gambling at this point during the week. So that's why this was a bad trade. Then it was a better trade because, okay, we're still bearish, but we have another 90-minute SMT, another micro SMT. After that, we displace, and we end up filling this fair value gap on NQ. Let me take a look, fair value gap, but not on ES. So look at this. Just gonna try and explain to you guys what this is. So we have NQ right here. You see? Okay, NQ right here. Let's pop up ES. Right here. So after we have this 90-minute SMT and then this micro SMT, what do you see right here? We displace here. So displacement on the 1 minute time frame is what you need then after this microcycle SMT. What do we see after that? We see NQ, this fair value gap right here. We both have a fair value gap on NQ and ES. On NQ, we end up respecting that. Look at that ES. Not. This is another form of SMT. It's called like SMT fair value gap, I would like to call it. They call it SMT fill. It's really, really nice after all these bearish confluences, and then also one asset not trading into fair value gap while the other one is doing that. That's also cracking correlation. And yeah, that is what made me take a short right here. This was right at the close of the market, and I should have taken profits here, right? But I didn't. There was no limit order set here. I was just gonna close it manually, but this happened so quickly that I was not taking profits here, and I was like, what the fuck did I do? Why did I not set a limit here, like to close my position? This is a, how much R? 2R, 2.36 is all I need. Is good trade. I didn't do that, so I just manually closed it at the top right here because I was so scared of hitting my stop loss. So this is just like kind of over trading to get that money back. So I don't really like this day, even though it was such a clean setup again. If I would have just let it run, especially just take profits right here at the low hanging fruit. Yeah, this is the low hanging fruit. So yeah. Again, nice read, just not good trade management. And then on Friday, the last thing, what we did right here, really, really nice day. This is where I ended up making most of my money this week. I was down $500, and after that, yesterday I made 2.2K with a really, really nice setup. As you can see, these risk to reward, it doesn't really add up. That's because from Wednesday, I kind of upped my size because I was like, bro, if I'm gonna win, I'm not winning $200. I need to make 4K on my evaluation. That's gonna take a long time. So this is just an evaluation, it's just simulated money. So I'm just gonna risk $400 from now on. I think that makes more sense to also just get to know with higher size and get comfortable with that. So that's why I decided, okay, to play higher size right here. That's why I had this bigger win also, because I risked $400 here, and it was like a 4-hour trade, so about 2K profit. So yeah, that was Friday. Let's take a look at why I took this. So again, bearish sentiment during the whole week. We can still use that weekly SMT we had yesterday, because there's no weekly opposing SMT. So we can still use that. What do we do here? This was like when Iran attacked Israel, or the other way around. I don't remember. But Asia was basically like, I mean, the whole day was just tripping down and was just a really volatile market. Unfortunately, when there's like a lot of war news, that's when the market moves the most. So that's also when we sadly can take the most and best opportunities, in my opinion. So we still have this weekly SMT. What do we do here? We drip down, we go back to equilibrium of this whole range, fill this fair value gap on NQ. We have this weekly SMT, then we have this 90-minute SMT, which can be an entry then, right? So 90-minute SMT inside of this fair value gap, another micro SMT. So if you go down and go back to the 1 minute time frame, this could have been an entry, fair value gap fill after this weekly 90-minute and microcycle SMT. We have this really nice context. Market maker sell model, we are above the true session open. After we drop below the true session open, it's gonna be less probable because these are the best safe trades that form here, right? Yes, I took a trade here, still because my draw liquidity was so clear that we're gonna go for these lows. So what did I do? I saw another 90-minute SMT right here. Then I saw price displacing down, a little retrace back to equilibrium of this range. I just entered because I just knew that, okay, price was ready to just go lower. This was just an accumulation. We did our manipulation here. We're ready to go, right? These doesn't make sense. This is just an SMT that will retrace price, but eventually these bigger SMTs, they will hold, right? So that's when I took a trade right here. Just stop at this fair value gap, I think. Some fair value gap on the 5 minute maybe. And I just take profits. I just caught the local bottom somewhere right here, just because I was looking at price and I was just like, oh, I'm gonna take this 4R. I'm not like gonna wait for this to happen, because I'm pretty sure that we're gonna get some kind of retrace back before going down. I don't want to risk any profit, so I'm just gonna secure the 4R. So that was that trade. For full transparency, you can look at my account that I actually took these trades. So I took a challenge on Blue Sky Futures prop firm. As you can see, this just all is the same numbers. This is this week. Same thing right here on the stats of the funded account. So yeah, I'm up about 1.6K. For this challenge, I need to make 4K. So I'm on the good path. And yeah, the reason why I'm still like trying to get some other challenge accounts, even though I'm funded with TopStep, is because I don't know, I didn't really was comfortable trading already the day after or the week after I got funded. I don't know why, I'm just a little bit stressed. So I was just trying to focus on this challenge account, but I think I'm gonna start trading on my funded account next week. But of course, I'm gonna do that with like $100 risk. And these challenges, I can do more risk, right? Yeah, this is how I trade. I really like it. I feel like it's so much easier to read the price now. It's just the mental part that's still hard, and the trade management especially. All your decisions like during the day. Oh, take profit here? No. Take this stupid trade or not? And then yeah, just all these small decisions that will eat up your good wins. So yeah. I hope you had any value, and I'll see you guys in the next one. By the way, let me just know if you guys like these kind of videos, then I will just keep dropping these weekly. It's also, I think, a long video, but not an hour long, I hope. So yeah, hope you enjoyed, and I'll see you guys in the next one. Peace out.